Hello, my friend. How are you? I'm so happy to see you again. Today, I will explain some important information about the trading that give me an interest and that give me the confidence in the trading, and also teach other people about my strategy, which is very beautiful strategy. Today is 17th of August 2025. I will explain some important information about how can we deal with the market. As you can see that there was on daily time frame, there was, as I said before, there was an order block. There was an order block, and if you can see, there was an order block, which is a breaker block daily, and also fair value gap daily from the above that pushed the price to the down, and there was a breaker block daily and fair value gap that pushed the price upward. When we change it to 1 hours to make a trade on lower time frame, sorry, I want to be clear with this information that I make it to see it very clearly. I will put it here. Okay, as you can see that the price is moving upward, sweeping this area toward the breaker block, a bearish breaker block. After swinging, this is a swing uh, high. This is the swing high. The price make a sweep and then rejected from this area and then it open above and then moving down. When the price moving down, we are waiting until the price make this market structure. This is market structure shift. Once the price make this market structure shift, and this is market structure shift. Okay. Once the price, sorry, I will put it in the middle, not in the middle. Okay. Sorry. From bottom and in the center. Okay. This is a market structure shift. This is a market structure shift. Okay. This is a market structure shift, and we will look for any order block. There was an order block. This is the green candle. This is an order block. We can look for the characteristic of validity of this order block. Is it valid or not? Is the price will move toward the swing low from the swing high between breaker block daily to the lower breaker block daily to sweep this swing low. This is the buy side liquidity and this is the sell side liquidity. So we will look for the validity of this order block. It makes market structure shift. This is market structure shift associated with a fair value gap. This is a fair value gap, as you can see. Okay, and also it move in the direction of buys. It moves in the direction of the buys. This is the buys, and also the total all buys is low. Okay, so this is an order block. This is an order block. When was it? This is an order block. This is an order block on 1 hour, and it is mixed coalesce with fair value guidance. On this order block, we can see multiple rejection that happen in 1 hour. Multiple rejection. This is first, this second, third. This is the fourth rejection. When we change it to 15, 30 minutes, and we can see how the rejection happen here. You can see it on 15 minutes. On 15 minutes, you can see how the price moving down when it reacted to this order block, and there is a rejection, multiple rejection, and make a fair value gap on 15 minutes. This is a fair value gap, and also the price again recheck it again. This is fair value gap, and make a market structure shift. This is a market structure shift. Why I use the body, not the wick? Because the wick it is not coalesced with fair value gap. There is no fair value gap here, so we will use this the body of the candle. Okay, so this is an order block. When we change it to 15 minutes, as you can see on 15 minutes also, there is a very beautiful rejection in this area. This is a rejection, also another rejection area, which is very beautiful on 15 minutes. And when we change it to 5 minutes, you can see very beautiful how these features can make it here in this area. We can, after market structure shift in this area, and make this rejection block, we can enter in this area and in this area. We can enter and make a sell in this area, okay, and also in this area. You can see it. You can see it in these areas. We can see it, and also we can look for on lower time frame some other features. I will explain it when we change it to 3 minutes or 1 minute. Um, this is very beautiful, and you can see how the market move to the down. You can wait it until this swing low, or wait it until reach the very swing low, which is this is before the swing low, and sell side liquidity. So you have two target. This is the first target, and this is the second target. This is the important information on higher time frame. When I change it to a 3 minutes time frame, I can see I can see how the market this rejection, this the first rejection, and moving down, then moving up, then moving down, then moving up, and then moving down. You can see how this inverted fair value gap reacted to this area. You can see how this fair value gap reacted, inverted fair value gap reacted to this area. Okay, and you can see how this is the inverted fair value gap. This is the inverted fair value gap. You once the price moving up above it and then moving down, you can sell here again. Once you sell here again, you can put stop loss above this. You can sell here, and sell here, and put the stop loss above here, above this fair value gap and this rejection block. When I change it to 1 minute, when I change it to 1 minute, I can see that the price very beautiful and moving. You can see how the price in this area on lower time frame. This is market structure shift. Once the market structure shift, and also on 1 minute, on 1 minute, this is a market structure shift and towards the buys, and there is also the inverted fair value gap. This is inverted fair value gap. You can sell here. You can sell here. Okay, you can sell here, and you can see how the price moving down. Okay, and also in this area you can make a sell in this area. You can see on 1 minute, this is a fair value gap, inverted fair value gap, coalesce with the fair value gap, and also another fair value gap here. You can see it on 1 minute, another fair value gap here. So we have two fair value gap. Once the price mitigate this fair value gap, you can sell here and put the stop loss above the second fair value gap, above this here, above the two fair value gap, and wait for the result that happen later on. It's very beautiful, and you can make money very well. And you can see here also, you can see here also how the price move. You can see this inverted fair value gap. Okay, and this is the market structure shift, market structure shift, and you can see and put how can you sell in this area and wait for the market to move more rapidly down. It's very beautiful to make money in these areas. And also you when I change to 3 minutes, when I change to 3 minutes, I can see how the price reacted to this inverted fair value gap also. This is the inverted fair value gap. And also on 5 minutes, I can see how the price reacted to this inverted fair value gap. You can see this inverted fair value gap. This is inverted fair value gap. Okay, this inverted fair value gap, you can see how the price reacted to this area. And also when you want to make these trading, look for rejection. You can see this rejection in this area. You can see this rejection in this area from this order block. This is a multiple rejection. This is a multiple rejection from the area and you can trade in the direction of the buys that is moved. This is a multiple rejection. This is also a multiple rejection. This is first rejection and then again a rejection. You can see for this rejection wicks from the above, and you can go in the direction of the buys. You can see how this rejection, and also this rejection, which is very important. You can add this information and check it, and you can see how the price move in the direction of the buys. Thank you very much, my friend. I'm so happy to explain this important information, and we will and I make this video for teaching purpose. Someone asked me about this rejection. What about this? This rejection is against buys, so we neglect it. This rejection is against bias. Okay, you can see this rejection. This rejection is against bias, but this rejection is with bias. It goes with bias. Okay, it goes with the direction of the trend. Neglect the rejection against the trend, because the neglection against the trend doesn't make this neglection doesn't make market structure shift. It moving the price towards this area and then neglected and market structure shift here and here and changing the state of delivery. So this rejection is valid, but this rejection is not valid. So you should understand that important information. You can see also on 15 minutes how the rejection block is working. This is a rejection. You can see it. It make market structure shift and also fair value gap. Market structure shift and fair value with this rejection. So when the price return to this area, you can sell here. You can sell here. You can see how the rejection happened in this area and neglect this rejection from below because it doesn't go with the direction of buys. So we will take the rejection from the above selling and not the rejection from the low, because this rejection doesn't push the price above this area. Okay, it is failed, but this rejection is succeeded to make market structure shift and to make fair value gap. Thank you very much, my friend. I'm so happy to talk about this subject. Thank you. Bye bye.